Today, I'm announcing a comprehensive new approach to make Canada the world's leading energy superpower. And its approach that is defined by three objectives. Energy security first. This means using Canadian energy to displace imported energy, including energy imported from the United States.
Did the United States just lose its oil lifeline? For decades, Canada pumped crude south like clockwork. Cheap, reliable, and right next door. Over 4 million barrels a day crossed that border, a steady stream. But now, that flow is veering east, and America's been caught flat-footed. As of April 2025, the game has changed. China's swooping in, hungry for Canada's heavy crude. And Canada? It's saying, why not? Pipelines are being rerouted, deals are getting inked, and the US is waking up to a nightmare. Its most critical oil supply slipping away. Why does this matter? Oil isn't just fuel, it's jobs, it's power at the pump, it's economic clout. And when Canada shifts east, it's not just barrels changing course, it's the whole geopolitical board tilting. Stick around. This story's got pipelines, tariffs, global alliances, and a superpower showdown that could reshape the future. Let's break it down. Enter the Trans Mountain Expansion, Canada's billion-dollar middle finger to American dependence. Once aimed at feeding U.S. refineries, it's now roaring westward, nearly complete in 2025. Its new target? Asia, especially China. This isn't a trickle, it's a flood. 900,000 barrels a day, live as of this spring. So why the switch? Simple. Canada's done being America's oil doormat. Years of haggling over prices, canceled projects like Keystone XL, and slapped-on tariffs finally pushed Ottawa to look east. Now, China's flashing cash, offering long-term stability. And Canada's ports, especially Vancouver, are becoming oil gateways to the Pacific. The numbers don't lie. Asia's expected to gulp down over half of this redirected flow. One pipeline is flipping the entire trade dynamic. Canada's not just diversifying, it's rewriting the rules. For decades, the US believed proximity meant control. Wrong. With Trans Mountain online, Canada's betting on Asia's booming demand, and China's grinning ear to ear. But this pivot isn't just about China. India's in play too. Its refineries are built for heavy crude, just like Canada's. As of April 2025, trade talks are buzzing. India could snag 200,000 barrels a day. Japan, another 150,000. This is a full-on alliance shift. The strategy's clear. Diversify buyers, maximize leverage, and escape dependence on any one superpower. It's not just smart, it's profitable. If Canada locks in long-term deals with China, India, and Japan, that's a trillion-dollar market reshaping global oil dynamics. And meanwhile, the US is watching its monopoly vanish. Now here's where it gets real. China's pulling off a heist without firing a shot. Its megacities, factories, and highways need oil, lots of it. And Canada's got exactly what its refineries crave: heavy crude. Trade reports and web chatter confirm it. Hundreds of thousands of barrels once bound for the US Gulf Coast are being rerouted to Chinese ports. Why choose Canada? Simple. The Middle East is unstable, Russia's unpredictable. But Canada? Stable, reliable, untapped potential. Beijing's playing chess, securing energy for the long haul, 2030, 2040, when oil might be scarce and demand still strong. By year's end, insiders say China might lock down 1 million barrels a day. This isn't just about fuel, it's about power. While the US scrambles, China's stacking its deck. Here's the fallout. Canada supplied 61% of America's crude imports in 2024, 4.2 million barrels a day. But with nearly 1 million of those now heading east, analysts say US imports could fall below 3.5 million daily by mid-2025. That's a huge gap. Gulf Coast refineries, specifically built to handle Canada's heavy crude, are now facing shortages. or forced to buy costlier alternatives. Gas prices already ticking up. $4 a gallon could be the norm by fall. America thought Canada was locked in, too close to stray, but Canada just said, no more. Let's rewind to 2024. That's when US trade hawks slapped tariffs on Canadian goods, steel, lumber, and yes, oil. Canada retaliated. But the real payback? This oil reroute. And as of April 2025, tariff talks are still a mess. Rumors of a 10% hike on Canadian crude are swirling in DC. Canada's response? Fine. China's buying. The strategy's survival. Why sell cheap to a bickering neighbor when another superpower offers stability? Since last year, Canada's exports to Asia are up 20%, led by oil. And here comes the wild card: Russia. Putin's already shipping 1.6 million barrels a day to China via the East Siberia Pacific Pipeline. And now, whispers of Canadian oil execs meeting with Russian envoys in early 2025, floating joint ventures. If Canada joins that club, we're looking at a northern oil axis: Canada, China, Russia, laughing at NATO. Russia sees opportunity in US weakness. If America leans more on Saudi oil, Russia can flood Europe with cheap crude, squeezing out Canada. And if Moscow and Beijing sync up with Ottawa, that's a geopolitical bombshell. Back to China. They're laughing all the way to the oil bank. With Canada on deck, China's securing future energy supply. This isn't just a play for 2025. It's a setup for the next 10-20 years. While the US scrambles to cover the hole, China's locked in a top-tier supplier. America's losing its edge. And Canada? It's cashing in, big time. But not everyone's cheering. Trans Mountain's expansion sparked protests across Canada. Environmentalists are chaining themselves to pipes. First Nations groups are suing over land rights. Footage from Vancouver shows unrest. Arrests in Alberta. It's chaos. But the prize? $20 billion a year from Asian exports. Jobs, taxes, economic fuel. Ottawa's betting the cash outweighs the backlash. Still, the US isn't happy. Sanctions rumors are flying. If Washington turns up the heat, Canada might be forced to pick a side. And here's another twist. This entire pivot is happening while green tech surges. Electric vehicles hit 20% of global sales in 2024. Solar is cheaper than ever. By 2030, oil demand might plateau. Yet here's Canada, doubling down on pipelines. Environmental lawsuits are piling up, court battles dragging into 2025. It's a risky bet, because even China is going all in on EVs. Half its cars could be electric by 2030. If oil demand dips, Canada's left holding the bag, pipes to nowhere. So, where does the US go from here? It's not out of the game yet. Options: ramp up domestic drilling. The Permian Basin still has capacity. Or cut a new deal. Ditch the tariffs, offer tax breaks, and rebuild trust with Canada. But time is ticking. China's not waiting. This isn't just a pipeline pivot. It's a full-scale rewrite of the global energy map. Superpowers are clawing for leverage as resources tighten. By 2030, energy won't just fuel nations. It'll define them. With that said, thanks for watching. And until next time.